Dr. Kim Anderson, our crop marketing specialist, is here now. Kim, what did the markets talk about this week?
Well, there's quite a bit of market talk. You look at the Russian exports, I think that's continued from the week before. It's just how much Russia has to put on that export market. You know, their exports are backed up, their ending stocks are projected to be relatively high, and they're looking at an average crop following a record crop last year. Then you got the Russian-Ukraine export agreement. It's due to be renewed. Russia said they're going to extend it for 60 days. Ukraine wants 120. That had some little impacts on the market. A lot going on in Brazil and Argentina. Brazil, record soybean crop. They're talking about not how that it's going to be a record, it's just how big a record it's going to be. And then you've got Brazilian corn. For the first time ever, Brazil will be the #1 exporter of corn relative compared to the United States. And then the big news is La Nina is dead. It came out this week. The weather forecasters are saying La Nina has moved over to a neutral position, and that June, July, August, somewhere in that time period, will go to El Nino, which means more precipitation, possibly higher production in the spring wheat for sure, the corn, the soybeans, and the summer crops, maybe some higher than expected yields for our winter wheat crops.
Let's certainly hope so. We could all use a change in the weather patterns for sure. Well, with all of that happening, how did the prices and the market react to that?
Well, when you see more wheat coming on the export market, when you see the potential for higher production, naturally prices go down. You look at what's going on with corn prices for the 2023 harvest. You go back a month, it's $5.75 for a forward contract. They're down to $5 1/4. Now that's only 50 cents, but that's a 10% decline in price. You look at soybeans. You go back 3 or 4 months, it was at $13.30, and then it got down, around $13. It's down now around $12, $11.90, I believe is what it was just before this taping. It's a 10% decline in soybean prices too. You look at wheat coming up right now. You can forward contract in northern Oklahoma for $7.50, Panhandle area for $7.55, southern Oklahoma somewhere around $7.30, something like that. So we've had that go down. But when we got the financial situation, we had 25, 30-cent drop in prices, gained back, 2 days down, a day or two back, it was back up. So it's around $7.50 now, holding relatively stable.
So I know you run the numbers too. What is your price outlook?
Well, if you look at what's going on, and let's just talk about wheat. It's too far to predict corn, soybeans, the summer crop prices. But if you look back, go back to July of 2010 and look forward, there seem to be two price ranges that our prices move in, from $3 to $6 and from $6 to $9. Right now we're in that $6 to $9 range. You look back over there, when we had the $6 to $9, we had the stocks to use ratio about 36%. Right now we're around 40%, so we're in that range. When they were below the $6, 3 to 6, our stocks to use ratio was up 55 to 65%. So we got relatively tight stocks, a good stocks to use ratio, and it'll take us a year or so to get that back up. So I'm probably looking at it staying in that $6 to $9 range. Right now the offer is right exactly midpoint $7.50.
Split the difference, right?
Split the difference.
Okay, great. Kim, thanks a lot. We'll see you next week.